Okay, everyone. We've talked about how the market works, some different investing strategies, how stock prices are determined. Now is a good time to jump into the types of investments you can make. Every type of investment we've discussed so far has been an individual stock. Individual stocks are great, especially because the financial upside of a single stock can be high. But for those of us who don't want to be following company news every minute of every day, worrying about the performance of their stock, there are other options out there that can limit your risk and limit the amount of time you have to spend staying on top of your investment. Another key type of investment that you need to know is called a mutual fund. A mutual fund is a professionally managed investment fund that pools money from investors and invests in many different individual stocks on your behalf. There are mutual funds of all different varieties, some that focus on industry sectors, some that focus on specific company sizes, some that focus on specific countries or regions. Mutual funds are great because you can diversify your risk and you can gain exposure to different types of investments you might not have previously considered. An ETF, or exchange traded fund, is a similar type of investment, except they are not generally actively managed and just represent a basket of stocks that aren't frequently bought and sold. All right, let's walk through how a mutual fund works. If you were to say invest $100 in a mutual fund that focuses on the tech industry, that mutual fund would allocate your money into a pool with all the other investors and invest it in a basket of tech stocks. So some of your $100 would potentially purchase Apple stock, some Square stock, some Microsoft, etc. Then the value of your investment would go up and down based on the performance of all those companies' stock performances together. You can research all the mutual funds out there by looking at sites like Morningstar. You can see all the companies they invest in, whether they're pursuing a growth or value investing strategy, how often they buy and sell stocks, and read up on their fund manager's investment thesis. They may not be sexy, but you'll see a lot of value in mutual funds the more you take a look. Now, let's make a mutual decision to go ahead to our next lesson and talk investing risks. Hey guys, be sure to subscribe, like, and comment. Tell us what you're thinking. What are you investing in? It's all about making better choices. For more information on topics like these, head on over to onomy.co. See you there.